In this video, I'm going to teach you about the Parabolic SAR strategy, how it works, its strengths, its weaknesses. Then we'll look at a quick back test for the strategy, and then I'll show you 1 or 2 tweaks you can use to make the strategy much more interesting. All this to help you become a more educated trader and investor. Hey, I'm the Augur. I'm a stock trader and options dealer. I make videos about trading, investing, finance, and economics. And if that sounds like something that's up your alley, then take a second to click some buttons and show me some love. Help me grow the channel. So without further blather, let's get into all that fun stuff. Okay, so I've gone ahead and pulled up TradingView, and we can see the Parabolic SAR strategy. So first, I'm going to talk a little bit about how it works. So the Parabolic SAR strategy simply starts at any place you pick, usually at the beginning of the data set in this case, and it just starts drawing parabolic lines. Right here, it broke that last parabolic line, so it starts a parabolic line here based on you have an average true range setting in here that's labeled as a factor. Actually the settings on the Parabolic SAR strategy are very confusing, so I might talk about those a little bit when we go to modify it at the end. As far as how it works, yeah, it just takes an average true range, draws a dot, and then every bar it moves that dot up a little bit and also adjusts it as it moves in that direction. So if the dot, an average true range from the close is higher than the dot would be if it moved up by a factor, it uses that one. If it isn't, it uses the factor length that you set in the settings. So like you see here where it makes that big up move, it moves up fast, and then where it's going flat, it's moving up at the parabolic setting, and then it moves up again, so it goes fast, and then the same thing here. So I hope you understand that. It's kind of crash course in how the Parabolic SAR works, but just drawing parabolas on your chart. So one of the strengths of the Parabolic SAR is you can see it's actually not bad. If you're a super fast trader, you can get some super fast ones out of here, but there's a lot of mess. And you guys know me already if you've seen a couple of these. I hate anything that's super messy. Anything that sends signals way too quickly is kind of annoying for me, and I'll show you why, because it usually shows in the back test when you have all these chop signals here. Well, that one wasn't terrible, but like all these chop signals here and stuff. So I guess it's kind of the strength and the weakness. The strength is like if you're looking for fast trades with trend, I mean, it's not that bad. You can get some solid ones here, right? And that's why some people like the Parabolic SAR. It's not bad for a stop if you're using other things as entry, exit, or other stuff like that. Like it's called the Parabolic SAR, and SAR stands for stop and reverse. So that's very much the original intention of the equation, is to act like a trailing stop of sorts. And that's how most people use it, as a sort of chandelier stop. So let's take a quick look at the backtest and answer the question, does the Parabolic SAR strategy even work? Well, you can see set at its standard settings. It's kind of a mixed bag, right? It lost a lot at the end, but it also made some money at the beginning. But it had an awful lot of trades, like 1,300 trades over this sample size is an incredible amount when you look at some of the other indicators we've looked at. Only a third of them were profitable, exactly a third, and it lost a little bit more than it made on every trade. So it didn't even have, it wasn't even, winning that much bigger than its losses, even though that's what it kind of looked like when you take a quick peek at the indicator. You can see in trendy markets, it probably does really well. And some big wins when it catches trend. When it gets chopped to pieces, right? And it's, average bars in trade, not much at all, 12 bars. So that means it spent the entry bar thinking, closing bar thinking, so it had 10 bars to actually trade. That's a very, very tiny trade, in my opinion. So with all that being said, let's take a look at 1 or 2 ways you can modify the Parabolic SAR strategy to perhaps be more interesting, maybe more beneficial to you. I don't know, you'd have to answer that question. So I've done something very simple with the Parabolic SAR. I've gone ahead and slowed it down by probably about a factor of 10. And we'll go look at the settings here. So it starts off at 0.02, 0.02, and 0.2. So all I did was change those by, I guess, a factor of 20. And we get this, which is still a trend indicator, but it's much less sensitive, right? It stays in trend a lot longer, and you can see, I mean, it has some losers, it has some winners, That one's a good one, huh? Yeah, it has some winners, it has some losers. But you can see that it has two kinds of trades at this point. It has flattish trades, and then it has the big curvy trades. And I want you to take a second to just appreciate how long some of these curvy trades are in relative to the fat consolidation trades. Like, you know, you consolidation trade, curvy trade, curvy trade. You have a series of consolidation trades, but they basically open and close around the mean. And that one was kind of rough, huh? That one was rough. So that's just a reciprocation, full reciprocation. See, you sold almost the same spot, bought the top, full reciprocation. That sucks. Sometimes you'll see those in big trendy indicators, and that's just because you're opening up your average true range. So let's look at the really interesting stuff. Let's look at the numbers, right? Because that's what everyone wants to see. So, bam, numbers. Yeah, this one stayed in trades quite a bit longer, 95 bars average, which is a solid length for it to stay in a trade, about 100 bars. If you can get above 100 bars, it's a pretty long trade, relative to what most people are doing. So it had 156 trades. Not a crazy sample size, but also it's not like 20 trades, right? It's over 100. It's a reasonable sample size statistically. It was profitable. It made some money. It's interesting. Let's dive into the numbers real deep here. So this is probably the interesting part. Average bars in winning trade, 142. Average bars in losing trade, 66, 73, 136, 148, and 59. So that gives you about an average of 100. So let's look at largest winning trade, $7,000, $1,800. Largest losing trade, $800, $700, $800. Average winning trade, $650. Average losing trade, $350. And you're winning almost 40% of your trades. So you're still losing more than you're winning, but because this is such a timed trend indicator, you can get very large wins. And that's what's going to pull it ahead. And you're definitely going to have to take advantage of that with your risk management if you're going to do something with it. Because at the end of the day, an indicator is just an indicator. It's just a way to make your observations or build something around your observations that's consistent. So your risk management behind those observations, like how you take advantage of those observations with your risk management, is going to be far more important than the lines and other stuff you teach your computer how to draw to help you stay consistent in your decision making. If that makes any sense. Hope it does. So with that, I hope you learned something new about the Parabolic SAR indicator, how it works, its strengths, its weaknesses, and one or two things that you didn't think it could do. Hey, thanks for watching. I really hope you enjoyed it. If you haven't already, do the clicky thing for the like button and the subscribe button, and help me grow. And then check out my other technical analysis videos. And I hope you have a great one. Ciao, ciao.